Right now, in 2026, there's a score attached to your home that you probably don't even know exists. It's not your credit score or property value. It's silently determining if you'll pay €20,000 more on your mortgage. Banks call it an energy performance certificate. But here's what they're not telling you. It's Europe's first climate credit score, below a C rating, and you're locked out of the cheapest money in history. Today, I'll show you 3 things no other finance channel has covered. 1. The interest rate penalty. 2. Why homes are becoming stranded assets. And 3. The loophole to unlock elite rates. This isn't theory, this is your money. Let's get into it. Let me show you something most Europeans have never seen. This is an Energy Performance Certificate, or EPC. Every home in the EU has one. It grades your property from A, ultra efficient, to G, an energy disaster. According to new 2026 data, if your home is rated A or B, major lenders are offering mortgage rates up to 0.25% lower than standard. On a $300,000 mortgage, that's $40 a month in savings, $12,000 over the life of the loan. But here's the kicker. If your home is rated F or G, some banks won't lend to you at all. Your home's energy rating is now your second credit score. Most people have no idea. Okay, so banks are using energy ratings to price your mortgage, but it goes deeper than that. The EU's Energy Performance of Buildings Directive, updated in 2024, has created a regulatory cliff. By 2030, all commercial properties must achieve EPC B rating. By 2033, the same rule hits residential. Here's the crisis. According to MSCI Real Assets Research, 80% of buildings that will exist in 2050 have already been built. And right now, 67% of UK homes are rated below EPC C. That means 2/3 of homeowners are sitting on what institutional investors now call stranded assets. These are properties that will lose value because they simply cannot meet future regulations. The market is already pricing this in. This creates a massive asymmetry in the market. Upgrading is no longer optional. It's the only way to protect your equity. Now let me reveal something your bank definitely won't tell you. Green mortgages, these preferential rates for EPC AB homes, aren't just nice environmental initiatives. They're risk-adjusted pricing. Banks have figured out that energy-efficient homes have lower default rates because utility bills are cheaper, so owners have more cash flow, higher resale values. We just showed you the €35,000 premium, better long-term appreciation. As regulations tighten, green homes become more valuable. In banking terms, lending to an EPC AB property is lower risk than lending to an EPC G property at the same loan amount. This is why in Spain, green mortgages now offer interest rate reductions between 0.10% and 0.20%. But there's a dark side to all of this that's accelerating right now in 2026. Commercial real estate is the canary in the coal mine. European office buildings rated EPC F or G are experiencing valuation markdowns of 15% to 35%. Major banks have stopped lending entirely. Blackstone, one of the world's largest real estate investors, is already divesting from all brown assets. Residential is next. The same regulations that hit commercial in 2030 will cascade to homes by 2033. This creates a massive retrofit bottleneck. There are 220 million homes in the EU. 110 million projects will soon be competing for a limited number of contractors and materials. What happens when everyone tries to upgrade? Prices skyrocket. A $15,000 retrofit today could hit $50,000 by 2031. Acting now in 2026 is your asymmetric opportunity. You're ahead of the wave. Enough doom. Let's talk actionable strategy for your home. Step 1. Know your score. Check your country's EPC register. Step 2. Get a professional assessment to find where you're losing money. Focus on high-impact fixes like loft and wall insulation. They offer the fastest return on investment. And consider a heat pump. EU subsidies can now cover a huge chunk of the installation cost. Step 3. Leverage subsidies. France and Germany offer grants covering up to 45% of costs. It's free money. Step 4. Finance smart. Look for green mortgages or 0% improvement loans to fund your upgrades. Finally, refinance once your rating improves. This isn't optional anymore. It's financial survival. Here's where this is all heading. By 2030, the EU aims for a 55% reduction in carbon emissions, and buildings account for 40% of that. Regulations will tighten faster than expected. We're seeing proposals for mandatory EPC ratings by 2040 for all new mortgages. In 14 years, if your home isn't EPC, you might not be able to get a mortgage at all. That's the reality of this transition. But here's the opportunity. EPC A or B rated properties will be the most valuable assets of the 2030s. You're buying compliance ahead of demand. Cities like Amsterdam are already seeing 25% premiums for high energy ratings. This is the wealth transfer of the next decade. Will you be on the winning side or the losing side? The choice you make now defines your financial future. Now go make it happen.
Look, I get it. This feels overwhelming. Energy ratings, EU directives, it's a lot.
But here's what I want you to take away. Your home's EPC rating is now a financial instrument. Treat it like your credit score. Monitor it, improve it, leverage it. 3 things to do this week. Check your EPC rating, 5 minutes free. 2. Research your country's energy upgrade grants. Save 30K plus. Get 1 quote from a certified assessor. Understand your upgrade path. I've put all the links and green mortgage tools in the description below.
If this video saved you money, hit that subscribe button.
We're covering the financial strategies that mainstream channels won't touch. And drop a comment. What's your home's EPC rating? Let's see where everyone stands. Thanks for watching. See you in the next one.